When it comes to investing, is it better to build a diversified portfolio or a consolidated one? And what strategies work better for what type of individuals? Hi, my name is Devin, and welcome to my channel, Reward Risk, where I cover stock trading and other financial topics that hopefully can give you a little boost along your financial journey. Now for the disclaimer, this is not financial advice and I am not a financial advisor. But if you're interested in topics like this, please consider hitting the like button below and subscribing for future content. First, let's cover the diversified portfolio. Because it's extremely hard to buy a basket of stocks by yourself through properly allocating the amount of money to the number of stocks to weight your portfolio correctly, most financial institutions offer funds in the form of ETFs, mutual funds, and 401ks. Every instrument has their own strategy to maximize the amount of return while minimizing the downside risk. And we know this is true because any individual stock represents a company, and a company can go bankrupt at any time or be disrupted by future technology. But the stock market as a whole most likely will not disappear because we live in a capitalist society where companies provide most of the goods and services that society uses. And it's very highly unlikely that we will transition to a socialist society where the government will own all goods and services. So that's all well and great that all these instruments will minimize the downside risk, but they also limit the upside potential as well. See, almost every fund benchmarks the S&P 500. And since 1926 to about 2018, the average annualized return is 10 to 11%. And while all these instruments aim to beat the S&P 500, they fail to do so over any significant period of time. This is mainly due to two reasons. One is management fees. Usually management fees come in either one or two ways. Definitely there's going to be a maintenance fee for the fund, and sometimes there's a performance fee where if the fund does really well in any particular year, the institution will draw a percentage of that performance. The second way is through just regular trading fees, because funds have to be balanced every so often, and that could be every month, every quarter, semi-annual, or annually, to reflect the goals of the underlying instrument. Even though that really sucks, where institutions take a portion of our returns, we still have something to our advantage, and that is the power of compounding, where our investments will grow exponentially. One way to figure out how to reach your financial goals is using the power of 72. You take an average annualized return of any particular instrument and you divide 72 by that number, and it will give you the number of years it would take for you to double your money. And that's one way you can try to plan for the future. Well, that's all and great and all for the future. But what about having money now, or 5 years from now, or 10 years from now, and not wait till you're 65? Is there a strategy that you can try to utilize to help you in the near future as opposed to far future? I think that's really where a consolidated portfolio comes in. Let's talk about a consolidated portfolio. Writing out the volatility. This isn't for the faint of heart or the weak hands. This requires conviction in your beliefs. Do you have what it takes to hold on when it's hard? And the other thing we have to think about, how much money do you have? Is it $10,000, $50,000, $100,000, $500, $1 million? Is that a lot of money? I mean, it might be your whole life savings. It might seem like an astronomical number right now. But let's put things into perspective. An entry-level engineer at Facebook or Google probably makes about $200,000 a year, every year. The down payment on a decent house in a metropolitan area in California is probably north of $250,000. And let's say you bought a really decent house for $1 million in California. How are you going to afford to pay the property taxes next year or the home insurance? What amount of money really will make a difference in your life? In this day and age, it's not $1 million. It's maybe like 5 or 6. If having $1 million doesn't make a difference in your life, then not having $1 million probably is not going to make a significant change in your life as well. So why not put that money towards something that can actually change your life? Did you know that on January 1st, 2017, if you invested in Tesla, today you would have made 125 times your money? Let's say you had $10,000 in 2017. Well, now you have $1 million. Let's say you had $1 million in 2017. Well, you'd have more than 100 million. And by the same token, Tesla has had drawdowns of over 50%. Or let's say you jumped in right before it draws down 50%. Are you okay? Are you going to be able to handle losing 50% of your money? Can you hold on when that happens? Those are the things that can start changing your life. But this isn't throwing your money randomly. You have to really believe which companies are going to pave the way for the future. Who are the disruptors of the industry? Who are going to be the winners in the future? You have to see it in the mind. And the other thing is, you don't have to find the next Amazon or the next Google. There are plenty of companies that you haven't heard of that have 3x, 5x, 10x. Just this year alone, GameStop has made an 800% return. Ford company has made over 100% return. So really doing your research and having conviction in what you believe in and putting your money there could potentially make a huge difference in your life. And I would say that the only people who do not need to have a consolidated portfolio are people who are already wealthy. At which point, all you really need to do is just protect your wealth. If you had $10 million, a 10% return is $1 million. You could live on a 1% return. So risk is not necessary for the people who are already wealthy, but it's very necessary for the people who want to be wealthy. On having a consolidated portfolio versus a diversified one, I think there is a place for both, one for the future and one for the near future. Hope you enjoy the video. Thank you for watching, and I'll see you next time.